Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, yesterday the Sensex hit a record high, but this morning the cues coming out of the global markets aren't all that encouraging, given the fact that Fed chairperson Jerome Powell has made some hawkish commentary on inflation and the rate trajectory going forward. We'll be decoding all the global cues and how it translates for our markets as well, and we'll be talking about a lot of stocks that are in news today, including TCS, LTI Mindtree, Delhivery and Sensex Engineering, among others. And we'll also be getting all your stock related queries answered by our expert on the show. So if you have any queries, send them in to us on our YouTube feed and we'll have them addressed by our expert on the show. But before we do all that, as always, let's take a look at the top stories at this hour. Wall Street declines for the third straight day as Fed Chair Powell quashes hopes of having reached the end of the hiking cycle. In his testimony to the Congress, he says that the fight against inflation has a long way to go and further hikes are likely as the Fed moves to bring inflation back to its 2% target. Nikkei and Kospi trade mixed this morning, but markets in China, Hong Kong and Taiwan remain shut on account of a trading holiday. The SGX Nifty, meanwhile, is indicating a lower start for the Indian market. Crude rises to $77 a barrel, hitting a two-week high on expectations that a tightening global grain market could lower biofuel blending and raise demand for oil. Lower US inventories also aid the upmove. TCS in focus as it expands its strategic partnership with UK's Nest, signs an $840 million contract for an initial duration of 10 years. The deal could rise to $1.1 billion if extended to 18 years. And among other stocks in focus today will be Delhivery, as Carlyle is likely to sell stake via block deal, and LTI Mindtree as it launches its generative AI platform Canvas AI. And US President Joe Biden and First Lady Jill Biden host a private dinner for Prime Minister Modi at the White House ahead of a ceremonial welcome later this evening. Well, those are all the top stories at this hour, but let me bring on board our technical expert for today, Shrikant Chouhan of Kotak Securities, to decode the technical setup for the markets. Good morning, Shrikant. Good to have you on the show. Given the fact that Sensex hit an all-time high yesterday, the Nifty didn't quite get there. But I think joining me right now is Aishvarya Dadheech, who's a market expert. Good morning, Aishvarya. Good to have you on the show. Let's first talk about the kind of cues that are coming out of Fed Chairman Jerome Powell's speech. He has indicated that the rate hike cycle may not be, nearing its end. The market was anticipating another 25 basis point rate hike in July. But given the kind of commentary that is coming out, it seems like, we could factor in two more hikes, if not just one. What are your own thoughts and where do you expect the, terminal rate to settle in by the end of this year?
Thank you. Thank you so much for having me here. Obviously, the whole context has changed in the last week or so. If you have seen the UK inflation data, which is reported recently, and the way the European banks and Bank of Canada has raised rates, there is a very strong likelihood, almost 3/4 of a probability that there would be another rate hike in July. But we should not forget that this is obviously we are closing in toward the end part of the rate hike. Inflation last month, both for US as well as for the major other countries, including India, was pretty, I would say, healthy in that context, and there is a lesser likelihood of it to, rise again. So in that context, what I understand is, that the ability for them or the need for them to raise rates further is very, very limited. And that has made, the kind of jump that we have seen in the US market over the last couple of months, even in other emerging markets, including India. So it's just, I would say, a little more pain before we see a very clear trend of, a very accommodative policy coming ahead. India specifically already have seen status quo. We have seen a very comfortable CPI data of 4.25 recently. Our core inflation continues to remain high, but we believe the trends, inflation's tailwinds look pretty sanguine for RBI to hold on to the rates. So whatever said and done, it is for sure that we are toward the tail end of this interest rate hike cycle.
All right, we are at the tail end of the interest rate hike cycle. Let me talk about the dream run that we have seen on the Lal Street. It has been a breathtaking rally since March this year. Do you expect this dream run to continue, given the fact that Q4 earnings weren't a big disappointment, barring the IT space? But when it comes to the first quarter earnings, which are the sectors that you think will outperform in the coming earnings season?
No, obviously, we have seen a very strong rally both in India as well as the other emerging markets, including Taiwan, Korea, even in the developed countries like US. Coming specific to India, we believe there is more legroom to this rally. If I see the last couple of years, the kind of momentum we have seen this particular couple of months, I think it is completely different. First of all, a lot of people will get surprised to see this rally because if you remember, a couple of months back, we were all very, uncomfortable with the credit crunch which was happening with the fall of a lot of those SVBs and banks like that. And all of a sudden, we are seeing a very good turnaround in the market. And the reason has been that we have seen very strong inflows by FIs, which has been to the tune of more than $9 billion for India specific. Right. At the same time, as you mentioned, the earning growth for the last quarter was pretty good. So that is all supported to the rally so far. But what gives us more confident to say that the rally will sustain here is that the valuation perspective, we still have a lot of comfort. If you look at the rally we witnessed in December 21 or even in the later part of 2022, the valuations over that time were much higher. Right? As of now, Nifty is trading at almost 22 times trailing. Right, compared to almost more than 25 and 23 times trailing compared to what we saw in 21 and 22. What is more important this time around that the rally we have seen here is more broad-based. If you see, though obviously Nifty has moved 10% in the last 3 months, but the movement in mid-cap and small-cap is to the tune of almost 19-20%. So the broadband, the width of the rally basically tells us that the strong economic momentum that we are witnessing, the favorable CAD, the favorable inflation data, the comfortable position of crude prices, this will give us more legroom to this rally. Having said that, we believe the opportunity lies more in small cap, right? So if you look at mid cap as a category, mid cap is trading at premium to large caps. But small cap are still trading at 20% discount to large caps, and even almost 25% discount to mid cap. So I believe the opportunity lies in high quality small cap franchise. That is where businesses which will able to continue to show good earning momentum will see a lot of movement in those stock prices in the coming months. Last but not the least, it's very important that, as I said, a lot of people were waiting on the sideline for this rally. So a lot of people have actually jumped up and participated in this rally so far. So we believe that participation will come given the kind of comfort that we will witness in the coming quarter's result. As you asked about the quarterly, estimate, I believe I think this was the third consecutive year where we have seen double-digit earning growth for Nifty. I think it has not happened in the last 15-20 years as far as I remember. And even the expectations of this next year is very, I would say, a healthy number of 13-14%. But quarter one will be more, the growth will continue to come from BFSI as a pack, because BFSI elements are very strong from credit growth perspective as well as very low credit cost. So that will continue to provide the much needed impetus. But a lot of other sectors like, whether it is industrial, capital goods, your auto and FMCG primarily.
Right.
All of these sectors will support a lot of earning momentum in the coming quarter.
Right. What about the pharma pack? Do you think a lot of interest will come back into the sector amid the sector rotation that is happening in the market now?
No, so pharma is very interesting. So pharma has massively been underperforming all across, whether it is your generics or even your CDMO or all of the other players. But if you really look at the data point, if I see the last 6-7 months, the kind of US FDA OI that we have received across pharma companies are just a couple of them. I think it's not more than 3 compared to almost more than 20 what we witnessed in the last 2021 and 22. So that, I would say that interest is coming back even on the pricing side, on the generics are possibly toward, getting toward a base scenario. So we believe pharma could look interesting. But I would be more tempted to stay more in businesses which have lesser presence in US and possibly who have a higher presence in formulations. Even some of those, API players, which has been not doing well over the last 2-3 years, provide good opportunity from that perspective. Now, this China plus one is debatable, yes or no, but obviously it provides a good tailwind for growth, and all of that initiative from manufacturing from government of India will also see a good amount of growth coming back. So, pharma providing is giving a very, very attractive valuations, and any investor with 2 to 3 years of time frame can look at those leading pharma or API players to be a part of their portfolio.
Right, so those are the themes to watch out for in this leg of the bull run. With that, Aishvarya, thanks a lot for taking out time and joining in this morning. It was a pleasure chatting with you.
Thank you so much for having me here.
Well, with that, let's shift focus to some market technicals. Then joining me now is Shrikant Chouhan of Kotak Securities. Good morning, Shrikant. All-time high on the Sensex yesterday, but Nifty didn't quite get there. But do you expect that to happen today?
Yeah, good morning. Yeah, I think, very much, because we saw good amount of activity in HDFC Twins, and that will actually add the market to move towards the levels of all-time highs. Bank Nifty was the only concern, and it was like not stabilizing, even though there was activity in PSU banks. But yesterday we saw good amount of activity in HDFC Twins. Both HDFC as well as HDFC Bank recovered almost 2% from their recent lows, and after hitting important support levels like 200-day simple moving average and important retracement levels. So based on the overall constructive pattern, I am of the view that it is going to cross this 18,900, and very shortly we are going to see the levels of 19,000 or 19,050.
Right. And what about the Bank Nifty? What are the levels you're expecting on the Bank Nifty today?
Yeah, like for the Bank Nifty, 43,300, 400 was acting as very good support for the market, but there was like the support from these HDFC Twins was completely missing. And because of specific strength in the HDFC Bank, which is a part of Bank Nifty, we saw the Bank Nifty was closing above the crucial level of 43,800. So based on that, the next level to watch out for would be 44,050 and 44,200. So I'm not expecting Bank Nifty to cross the level of 44,500, which was its immediate highest level. But yes, at least 44,200 is more likely.
Right. Let's talk about, stock of the day today, TCS. It has expanded its partnership with UK's Nest for enhanced member experience. In fact, if you look at the deal value, it is somewhere around $1 billion. And if the contract is extended for 18 years, it will translate into somewhere close to $2 billion or thereabouts. After the, lukewarm performance in the fourth quarter, the stock did manage to make a recovery. And it's, heading towards the 3,500 levels or thereabouts. Do you expect it to retest those 52-week highs by the end of the year, or what is the outlook on TCS now? We also have a couple of queries coming in on this stock from Trilok and a few others on our YouTube feed. How should one position themselves in TCS now?
Yeah, I think very first we need to see that whether the downside is limited or not, and certainly downside is limited for all the IT companies. Especially for TCS, it is holding well above the mark of 3,150, and after this specific news flow, we are expecting stock to change its range from 3,150 to, let's say, 3,300. Broadly, we are expecting it will take some more time because the upward move that we are expecting should remain gradual in nature. But yes, eventually we are going to see the levels of 3,400, 3,450. That's the overall view. And the strategy should be to buy even at current levels and more on dips if there is a view of at least 6 to 12 months. Because a lot of news flow will come. Again, the street will start looking at the quarterly numbers, and based on that, the street will start betting on the overall positioning of the IT sector. So that will keep the sector a little bit volatile. But broadly, we are of the view that these are the levels where we should look for adding the stocks with a medium to long term view.
I also want to talk about the Midcap IT pack. LTI Mindtree has launched its own generative AI platform, Canvas AI, and this will accelerate the concept to value journey for enterprises. Now, we have queries on Midcap IT. In fact, Debu K has written in, wants to know, what to do with this stock now. Midcap IT, of course, defied larger peers and handed in a great set of numbers this time around. And LTI Mindtree is holding above that 5,000 level on the charts as well. Would you advise investors to buy on dips, or do you think they should buy in at current levels as well?
See, at current levels, it has multiple resistance. Like I'm going to say, since last almost a year, the stock is finding a lot of difficulties to sustain above the mark of 5,000. So most of the time, the stock has visited this level. But whenever there is a panic or some weakness in the market, we saw the levels of 43,000, 4,300 or 4,400 on the downside. So 10% downside is also like we can expect if there is any correction in the market. So we need to be a little bit careful while adding at these levels. In fact, we should look for taking some trading bets instead of buying with a medium to long term view. If there is any correction, then certainly close to 4,400, 4,300 levels, we should look for adding LTIM at on dips. But at these levels, just avoid.
All right, avoid at these levels. Let's talk about delivery as well. You know, plenty of block deals have been happening this week, and today Carlyle is expected to offload 2.53% stake via block deals, and the base price is somewhere around 385 50 rupees, 385 rupees 50 paisa or thereabouts. It's very meager discount to its current price. If you look at some of these new age companies, they are off their lows, and you know the likes of Nykaa, in fact Paytm, have been getting positive views from analyst community as well. But looking at delivery specifically, if there is some bit of a dip that comes in today's session, would you advise investors to buy into it?
I think see all these logistic companies, they have like started doing well, and there are buyers as well as sellers available. So whenever there is some selling or whenever there is some buying in the market, it gets easily crossed. So it is very clear that there is interest, and based on the specific news flow, I think after the specific deal, it should recover back. It was somewhere close to 700 levels. From there, all the way it has fallen to 300, but now it is stabilizing, and whatever whichever the hangover was there of the selling, I think that is now releasing. So after particular this deal, it should do well, and if there is a medium to long term view, then certainly we should be buying.
Right, that's the view on delivery. Then what's your outlook on HDFC AMC? Now this stock saw a very stupendous rally day before yesterday. In fact, yesterday we saw Shriram Finance also rallying quite a bit after Piramal Enterprises offloaded its stake in the counter. These two stocks, what are the levels one should be watching out for?
See, I think both the stocks are showing a lot of strain, but in that specifically HDFC AMC is available at the very close to its 52-week lows. So risk-reward ratio is more favorable for HDFC AMC to buy and hold. From here, the stock can move to the levels of 2250 or maybe 2300. But for Shriram Finance, I think it is very close to its fair value as well as it's very close to its all-time highs. In fact, it is into all-time highs. So if there is any correction, then we should be buyer. But at these levels, HDFC AMC looks really.
Right, HDFC AMC is looking very good. What's your thought on Glenmark? There is some negative news coming in that US FDA has issued a warning letter to its US unit. But yesterday we saw Lupin. It has bagged US FDA approval for, its blockbuster respiratory drug Spiriva. And, a lot of these brokerages have come out with their reports on this stock this morning. And they believe that this approval is already in the price and the upside is rather limited in this stock. What is your own thought? How should one play Lupin and Glenmark? Should one buy into Lupin given the fact that, this was one factor that the market was really watching out for, when it comes to this drug maker?
Yeah, I think from the pharma space, certainly if there is any correction, then we should be buyer in Lupin. But at these levels, I think it is very close to its price targets of 900, 920. So it is very close to fair value as well as I think the news is already in the price. But again, as the overall sentiment for the pharma sector is improving, I think we should be buyer if there is any slight correction. I'm to say if there is a correction of 5%, then Lupin looks really good. Sun Pharma as well as Cipla. For Glenmark also, we are of the view that we should stay away because it is very close to its resistance level. And in last 2 years, whenever the stock has moved to this particular level, I'm to say current levels close to 700, we saw some profit taking. So here we need to be a little bit careful. But Glenmark Life Sciences, GLS, which is currently trading around some 575, 580, there we have bullish view, and there we are expecting furthermore upside in the medium term. So Glenmark Life Sciences is much better than buying Glenmark Pharma.
Right. All right. What about Laurus Labs? We have a query coming in from G. Manjunath and wants to know your thoughts on Laurus Lab. A short-term view is what this person wants.
I think it's a technical rebound that we are seeing because of the overall performance of the pharma sector, but there is hardly any major strength in this particular stock. So the strategy should be to look for reducing or exiting out of Laurus Lab even at current levels, and I think there are a number of stocks which are there to buy for. So use this current rally or up move as to reduce positions.
Right. Let's also take up a query on Hindalco. This one is coming in from Rupak Mehta and wants to know that he's been invested in Hindalco at the rate of 496 since early 2022. And he wants to know whether he should hold on to it or sell. Yesterday, I think this stock was among the top losers on the index. What would you advise him to do?
See, in cyclicals, always we need to ready to buy if there is any correction because they remain in a broader trading range and the overall performance remains always volatile. So whenever there is a correction, if we look for adding them, then actually that helps a lot to investors instead of buying at specific price and sitting on it for a longer time. So as he has bought at 500 rupees, I think current levels are really attractive to buy, to add more. Because I'm expecting stock to remain in a range of 500 to 400. And but yes, there are a few other stocks from the specifically from the steel basket in which we like Tata Steel as well as Jindal Steel and Power. So they should do well, really well in the near term. And if there is a medium to long term view, then he should look for adding even at current levels in Dalco.
Right. We have a query coming in on Bank of Maharashtra as well. This one is coming in from Vishal Solanki and wants to know your thoughts on this. Now, he wants to know whether one should buy into the counter today or not. If you look at the stock over the last 1 month, it has lost 10% or thereabouts. And in the last 5 days also, it has been under pressure only. Would you advise investors to buy into this and, keep it for 4-5 months in case a recovery comes by?
One thing that we cannot forget that the markets are very close to its all-time highs, and at these levels we need to be more and more selective. So instead of taking just trading bets or bet with a long-term view at current levels is not advisable, especially in mid-cap and small-cap companies. So it is better if he's like really interested in buying in any BFSI space, then HDFC Bank looks really good. Even at current levels, but for Bank of Maharashtra, our view is that it is better to stay away.
Better to stay away from Bank of Maharashtra. But what about PNB? We just got a query from Ashok Kandukuri, and he wants to know what is the view on PNB then.
So for PNB also, fair value is around 60. Based on technicals also, the stock is gradually moving upward. So it is relatively underperforming to other stocks. But yes, if there is any holding, then he should look for holding to means I'm just say stay invested in the stock with a view of max 60 on the high side, which is still decent upside, close to what 10% sort of 15 to 20%. But at these levels, we really like stocks which are going to do well in the short term as well as in the long run, and in that we like HDFC Bank. So for PNB, the view is to hold.
Right, hold on to PNB, that's the call. But we also have a query on Tamil Nadu Petro. This stock has not been doing all that well this year, but it's looking to make an attempt at a comeback. Up somewhere around 2% in the last 5 days, but on a YTD basis, it is down nearly 13%. So for somebody who's invested in this stock, should they hold on to it or exit whenever there's a bounce?
Again, the overall pattern is not suggesting any pattern, any specific formation. But the way there is a lot of things and the news flow in the overall oil and gas space, we are of the view that at these levels, just stay invested. It is in the range. So if there is any rebound to the levels of 90, 92, then look for exiting. But at these levels, it is better to stay invested.
This query had come in from Adi. I hope this answers your query. With that, Shrikant, I think we've come to the end of this Q&A session, but leave us with some stock recommendations for our viewers.
See, I think the way the market is consolidating and it is becoming more and more stock specific, I think we should look for adding those stocks where the beta is a little bit high or where there is fresh momentum that we can see on the charts. So based on that, we like Tata Steel, which is currently trading around some 114, 115. There we have a bullish view. We are expecting eventually stock to move towards 130, 135 based on its fundamental fair value. But at current levels, with a trading view, if we create any long positions, then keep a stop loss around 111, 110. We can expect targets close to 118 or 120. We also like HDFC Limited, which is around 2700 levels. There also we feel that the stock is moving towards 2750 or 2770. Keep a stop loss somewhere close to 2680 for any trading long position.
Well, Tata Steel and HDFC, two of the stock recommendations coming in from Shrikant this morning. With that, Shrikant, thanks a lot for joining in this morning and addressing all our viewer queries as well. Wish you a very profitable trading day ahead. Well, with that, we have come to the end of this edition of Morning Trade. But of course, on a programming note, don't forget to tune in at 11 a.m. as we get your big market voice on the dream run that the Lal Street has seen starting March 28. And he'll also be sharing his thoughts on which are the sectors that need to be looked at in this leg of the market rally. So don't forget to tune in at 11 a.m. For a very special interview with that big market voice. Well, with that, thanks a lot for watching, but stay tuned because coming up next is Opening Bell.